Hey everyone, this is Jay Soloff from Investors Alley, and this is our options trade of the week. So what I'm talking about here is not going to be a trade recommendation from one of my services. This is a trade for educational purposes only. All right, so we are here at marketchameleon.com looking at their unusual option volume page. I have sorted the volume by options volume, most to least. I like to see where a lot of the action is. We've been seeing a lot of Apple up here, and what's really interesting is that Apple's just blowing away everyone else. It normally trades a massive amount of options, 1.4 million on average. It's traded almost 2.5 times that today, almost 3.4 million. That's just a ton of options. I mean, we're talking about index territory here, if not more. So a lot of action. Apple, of course, $2.5 trillion market cap. It's just been on a tear, going higher, up another 2.4% today. Just killing it, all-time highs. You can see 78% calls to 22% puts. Since you generally trade calls when you expect something to go up, that is an indicator. Of course, we don't know buying, selling, but generally speaking, when you see a lot of calls, that is a bullish indicator. Could be because it was up a lot in a day. It could be because it was down a lot and people expect it to bounce back. But whatever the reasoning, it tends to be bullish when you see a lot of calls trading. So, in fact, if we go to the trades, and again, sort of by quantity, you can already see a lot of action. Big trades in the calls look like some potential rollouts, rolling out a week, maybe rolling out month or two, some September trades. Let's see here. This one here. So when you're seeing, so this is an August trade, and it looks like selling the 180 calls for 20 cents with the stock at 148. Now, when you see something like this, and you might be thinking, well, 180 is pretty far out of the money, but you generally don't want to sell calls naked like that, just in case. I mean, you never know when the stock could take off. So generally you don't. Something like this is probably tied to stock. Maybe not this particular trade. This trade itself is not tied to stock, but this could be done versus long shares that were bought at a different time, or that someone is holding, and just a way to kind of increase the return on cash at risk. So something like this probably done versus some other long instrument somewhere else. Where if it's stock contingent like this one down here, this is January 2022, this is more likely a covered call where someone bought 400,000 shares and sold 4,180 calls against it, again all the way out to Jan 22. So this was done for 280 and collecting over $1 million in premium. So that's probably a covered call as opposed to this, which again could be naked calls, but probably done versus some kind of long position. But you could see lots of call activity. Even cover calls, even though it's selling calls, tends to be more of a bullish sort of indicator if they're done out of the money. And sure enough, here we look at Apple closing at 149. You can see lately it's just taken off. This is all-time highs. A lot of good news. People expect earnings to be good. They're ramping up production. They're looking at doing like a buy now, pay later sort of thing. So just a lot of positive news on Apple that has caused it to go higher. You can see if we go to the options chain here, looking out at August. So those 180 calls, which are pretty far out of the money, they're already up to 28-29 cents. But generally, so if you sell them, you have this sort of let's see, selling calls at the 180 strike. You have this unlimited risk here above 80. This doesn't go out very far, but you just make that money in terms of premium, and if it goes higher, then obviously you can lose an unlimited amount as it goes higher. So that's why you generally do something like this versus shares, to where you make money. And here it does show, but this is where your earnings would be capped. So that's probably a trade more like something like that. Again, we also saw what was most likely a covered call here out to January 22. Same situation. And here you can see it leveling out. Obviously a lot more premium involved because it goes out, whatever, 6 months. So so a lot of interesting action in Apple. If you're interested though in the buying calls and puts, there's a link to this page of options for Trader Pro, which is my service where we just focus on call and put buying. So check it out if you're interested in that sort of trading.